Good day, everybody. Welcome back to our channel, Kareli Academy. I am Ntate Kareli, and I will be your facilitator for financial accounting. We are going to do revision on the question paper written in June 2023. And from that question paper, we are going to put our focus on question 3. Now, while you are looking for the question paper, please click on the subscribe button. Also click on the notification bell so that you can be notified for the future videos. Also like this video if you like it, and you can also comment. Your comments are really appreciated. If you have found the question paper, let us go straight to question 3. As a junior bookkeeper, you are supplied with the relevant information of Malamholo traders for the year ending 30 June 2021. You are required to prepare the statement of profit or loss and other comprehensive income for the year ending 30 June 2021. And also you are required 1.2 to complete only the asset section of the statement of financial possession. 1.3, you must also draft the notes to the asset section of the statement of financial possession. Now, let us call this video part 1. We are going to do only 1.1. We are going to prepare the statement of financial possession. Actually, we are going to prepare the statement of profit or loss and other comprehensive incomes for the year ending 30 June 2021. That is where we are going to start. Let us check if we have the answer sheet. There is an answer sheet, Malamholo Traders, statement of profit or loss and other comprehensive incomes for the year ending 30 June 2021. Okay, guys, please don't be confused by the name Malamholo Traders. I have retyped the question paper. The names will be different, but the content is the same. Now, you must note that we are going to use the periodic stock inventory. Malamholo Traders uses periodic inventory system. Now, when we use periodic inventory system, we know that we don't have the cost of sales. Therefore, we need to calculate the cost of sales. It means we will need revenue, couple of sales. In the question paper, they have used revenue. So let us use revenue. And then for us to be able to calculate the cost of sales, we will need the opening inventory. And then we must add to it the purchases. Add again to it the carriage on purchases. Add again to it the custom duties. Sometimes they call it the import duties. And then we will get our total inventory. And then once you have your total inventory, you will subtract or minus the closing inventory to be able to get the cost of sales. And then now revenue minus cost of sales will give us the cost profit. And then we will have other incomes. Now, guys, the reason why I'm writing all of this is that I want us to go directly to the adjustment or additional information. So let me just prepare this. Now let us check what are our incomes. Which incomes do we have? The incomes will be on the credit side. It means we have credit losses recovered, and then settlement discount granted, and we have sundry expenses, right? We said we have credit losses recovered and rent income. Let us include them. credit losses recovered. We both have the rent income, and I'll skip a few lines, and then we will have to less distributions, administration, and other expenses. Let me quickly put some that are needed. So guys, after inserting my incomes, I have also inserted some more expenses. I have some more expenses. I have inserted coverage on revenue, credit losses, packing materials, also the salaries, also the sundry expenses, and I've included financial costs as well as the interest on loan. Now, that is the information that is given. Now, let us now focus on the question paper. And on the question paper, let us go straight to the next page that has adjustments and additional information. On our additional information, you have adjustments 1 up until adjustment 10. So we must use this adjustment to complete the statement. Now, what we know is that for us to have revenue, we must always subtract sales returns as well as settlement discount granted. Now let us do that. On our answer sheet, we start with revenue. We said our revenue will be revenue. How much is revenue? It's 413,700. We minus 7,250 for sales returns, and we minus 6,540. That will be for settlement discount granted. And how much is it going to be? 413,700 minus 7,250 minus 6,540. It gives us 399,910. Then let's check opening inventory. Our opening inventory, again, let's check from the question paper. Inventory at the beginning of the year. You find it on your pre-adjustment trial balance date is inventory on the 1st of June. It's 45,860. 45,860 on your answer sheet. You have it. 45,860. And then our purchases, we should know that it's the opening balance purchases, 143,500. And then from our trial balance again, we will see that we don't have purchase returns, but we have settlement discount received. Therefore, we must subtract settlement discount received. Settlement discount received. It's 570. And then let us look from our additional information if we don't have any transaction that will affect the purchases. Now check transaction number 1. Trading goods of 825 were returned during this financial period, and these goods were included in the inventory on hand as mentioned above, but no entries were made. Therefore, it means this will be your purchases returns. You go to your answer sheet, and then you subtract again purchases returns of 825. And then how much will it be? 143,500 minus 570 minus 825 will give us 142,105. And then on the question paper, again, let us look for coverage on purchases. Coverage on purchases, do we have it? Yes, there is 990 coverage on purchases. And then let us write it. Coverage on purchases on the answer sheet. It's 990. And then custom duties. Let us check if we have. We have custom duties of 10,400. Right, 10,400 for custom duties. Now we must get additional. We must get total. Total inventory. To get that, you add all these. Add all that, then this will be your total inventory. Now from total inventory, we must subtract the closing inventory. Back to the question paper. Closing inventory, you will always find that, or in most cases find it in your additional information, for 1,900. Now that is the closing inventory, 41,999. And then to find your cost of sales, you will then say is closing inventory, it's total inventory minus the closing inventory. Therefore, you will get 157,356. Now for your cost profit again, to get cost profit, it's revenue minus cost of sales. It will give you the cost profit. We are done with that part. Now let us go again to our question paper. Transaction number 2, coverage on sales of 550 was still outstanding. Now coverage on sales was still outstanding. You go to your expenses, coverage on sales or coverage on revenue. The opening balance for coverage on revenue is 1,065. You add that 550. 1,055. You add that 550. It's 1,065, not 55, 1,065. You will have 1,065. You add 550. They give us 1,650. Then we go to the next transaction. We have inventory on hand at 30. Inventory on hand at 30 June 2021. We have inventory, that's closing inventory, we have utilized it. Now the packaging materials 390. What do? We go to packaging materials. You type in the opening balance of packaging materials 950, and then you subtract the closing balance 390. 950 minus 390, which give us 560. I hope you are covered. And then the next transaction, we have rent has been received up to 30 November 2020. That is number 4. Rent has been received. You go to the answer sheet, rent received. It's on the income. Now the opening balance for rent. Now remember, guys, the amounts that appears on the pre-adjustment trial balance, they are your opening balances, meaning that is what you have received already or what you have paid already if it is an expense. Now we want to know what is outstanding or what is prepaid. We want to know what is outstanding or what is prepaid. Now we go to rent. The opening balance for rent is 12,000. Let us have that 12,000 as our open balances in bracket 12,000. Now, what does the additional information says about the rent? It says it has been received up to 31 December. Now, from the beginning of the financial period, that is July, it's July, August, September, October, November, December, meaning we have received rent for 6 months. We have received rent for 6 months. Now, how much will rent be for a month? Now, 12,000 divided by 6 months, it's 2. And then the outstanding 6 months again will give us 12 months. Therefore, let me write with a red color. We are going to add 12,000 that is outstanding. This 12,000 will be from January until June. Pardon. The received 12,000 was from July until December. It was received, and then the remaining 12,000 is received from January until June. Therefore, for 24 months we will have for 12 months we will have 24,000. That is 12 received already, and this rate is 12 that is outstanding. We have 12 months for the whole year. The first 6 months is 12,000, meaning from July until December, and the last 6 months from January until June will be 12,000, and for the entire year it will be 24,000. Back to the question paper. Adjustment number 5. An additional amount of 120 must be written off. Now we go, that is for credit losses. We check again the opening balance for credit losses. We check again the opening balance for credit losses. We have 8,155. Now on your answer sheet, you will have that opening balance, credit losses, 8,155, and you add to it the additional 120, which will give us 8,770. 8,000, not 7, 8,270. You add 8,155 plus 120 is 8,275. That 120 is your additional credit losses. And then on the question paper again, number 6, salaries were received for 10 months only. Now, how much was received for 10 months? How much was received for 10 months? You go to salaries, open balance, 69,000 was received. 69,000 was received. For how many months? For 10 months. Therefore, you go to salaries and say opening balance 69,000 was received, meaning 2 months are outstanding. How much will the 2 months be? You now say we want the amount for 2 months. 69,000 divided by 10 months equals to how much? 69 divided by 10, it will be 6,900. And then that amount that you get, $6,900, that is for 1 month. Now let us increase it by 10,000, is multiplied by 110 divided by 100, meaning we are increasing it by 10%, because now, like it was said on the question paper, on 1 June, on 1 May, salaries were increased by 10%. Meaning the last 2 months, it's May and June. Therefore, we need to know how much was increased. It increased for. Now 6,000. Let me do this. We said 6,900 multiplied by 110 over 100 will be equal to how much? It will be equal to 7,590, meaning that will be the new amount for your salary. And then we need that amount, 7,590, 2 times, meaning we multiply it by 2. And if we multiply it by 2, it will give us how much? It will give us 15,180. That is for 2 months. Remember, 69,000 was for 10 months, which was paid already. And now how much is outstanding? With a red pen, I will write the outstanding amount, which is 15,180. And then how much will it be? It means now it will be 84,180. Let me put it in the middle. It will be 4,180. We will now move to the next transaction. We are done with salaries. We go to transaction number 7. Remember, let me just explain again. The 69,000 is for the money that was received already for 10 months, and then the last 2 months were increased by 10%. It goes to 15,180. Understood? Yes. 69,000 was received for 10 months. 15,180, we increased it by 10% for 2 months. Yes. I hope that is understood. Now back to our question paper, transaction number 7. Number 7. The sundry expenses includes an amount of 11,544 for an annual bonus, which was paid up to 30 September. Now, what they are telling us is that this 11,544 is for annual bonus. Therefore, we go to sundry expenses. And then on sundry expenses, we should have our opening balance. How much is open balance? Check the question paper. On the question paper, our opening balance for sundry expenses, that is 33,660. So on your answer sheet, you must indicate that 33,660. And then remember the 11,000 is included. 11,544 is included in sundry expenses. But now we need to check, it's a bonus for how many months? It's a bonus for how many months? It was paid up until 30 September 2021. Now we count from July until July 2020 until September 2021. Now from July until June, it's 12 months. And then July, August, September, meaning it's paid upfront by 3 months. Now, what do? We need to divide it by we need to divide it by 13 months. The annual bonus was paid up until now. If it's an annual bonus, it means now their year should start from October, right? Now it means 3 months that was paid in advance should be subtracted. Now we go to our answer sheet. If it's annual, that means it's for 12 months. We divide it by 12. Now when we divide it by 12, it gives us 960. 62. Do it on your calculator. You must check. It gives us 962. Now that 962 is per month. Now we want for 3 months. Why 3 months? Because it's July, August, and September. Now multiply it by 3. It gives us how much? It gives us, let me see, 962 multiplied by 3 will give us 2,866. Now this 2,866 is the one that is prepaid. 2,866. It's prepaid. Therefore, if it's prepaid, we must say 33,660, which is the opening balance, minus this amount that is prepaid. It will give us how much is remaining. Now, 33,660 minus 2,886 is equal to, on your calculator, it should be 30,077.4. Let me explain this one again. We said 33,660 is the open balance for sundry expenses. And inside this 33,660, we have 11,544, which is given for an annual bonus. Now, if it's given for annual bonus, it means it's 12 months. We need to divide it by 12. Now, after dividing it by 12, we get a monthly amount of 962. Now, because it ends in September, we must calculate from the end of the financial period until September. It gives us 3 months. Therefore, the monthly bonus multiplied by 3 months is 2,866, which is paid in advance. Right? The next transaction. Non-current asset must be depreciated as follows. We have equipment at 20% per annum according to the diminution method. Let me start there. We don't have any equipment, therefore, on the answer sheet, we have a new account, depreciation. Now, depreciation, we start first with the depreciation for vehicle, or no, for equipment. Depreciation for equipment, the question paper said it's on diminishing. Therefore, we need cost price minus accumulated depreciation. We go there again, equipment, cost price is 152,000. Cost price is 152,000. Accumulated depreciation is 23,200. Therefore, we go to our answer sheet. Depreciation on equipment, we take 152,000 minus 23,200, and then whatever we get there, we multiply it by the given percentage. given percentage, that is 20%, and it will give us 25,760. Check it. We said 152,000 minus 23,200 multiplied by 20% as given in the question paper equals 25,760. That is the first depreciation for equipment, 25,760. And then we need to go to the depreciation on vehicle. I normally write old vehicles for old vehicles. Let us check again on the question paper. What are they saying? On the question paper, they are saying vehicles at 15% per annum according to the cost price. Now it means we don't need the accumulated depreciation on this one. We just take the opening balance for vehicles and subtract the new vehicle. Vehicles is 258,840. 258,840. Now on our answer sheet, 258,840, we minus the 200 of all the vehicles, and it gives us how much? It gives us 58,840. And the amount that we get there, the amount that we get there, 58,840, we multiply it by the percentage, which is 15%. How much will it be? Remember, this is still for old vehicles. This is still for old vehicles. 58,840 multiplied by 15%. It gives us 8,826. And then the new vehicles is 200,000. We multiply it by 15%, and then multiply again by. Now let's check how many months have we had this vehicle. How many months have we had this vehicle? Now, this new vehicle was purchased in December, end of December, meaning from January to June, it's 6 months, which means we need to multiply it by 6 and divide it by 12. 200,000 multiplied by 15%, multiplied by 6 divided by 12. the answer we get will be 15,000. Now this 15,000, let me color it with a different color. This 15,000 plus this 8,826 added together will give us how much? It will give us 23,826. And then 826 to 25,760 plus 826 equals to 49,586. Let me repeat. We calculated the depreciation for equipment is 25,760. We calculated the depreciation for all equipment and for old vehicle and new vehicle, and then when we added them together, they give us 23,826. Therefore, our depreciation for both equipment and old vehicles will be 49,586. Then we move forward. Let me do this so that we can see these are only calculations. Right. The next transaction, create an allowance for credit losses at 5% of trade and other receivables. Now, when we create an allowances for credit losses, it will be an expense. Now, why are we saying it is an expense? Now, when we have an amount as an open balance for allowances for credit losses, you must take that amount and compare it to what we are going to calculate. Let me start by calculating it. I'll explain. It's called allowances for credit losses adjustment. Now, when we calculate this, you must first take the amount for trade. You must first take the amount for trade and other receivables. Okay, here is our trade receivables control. It's 42,700. You take that 42,700 and then you must subtract the new credit losses. Remember from transaction number transaction number 2. No, transaction number what? Let me check. Transaction number 5. We said 120 must be written off, meaning this 120 is not subtracted from the trade receivables. Remember, when you write off a debt, it must be subtracted from trade receivables. So therefore, let's go to our trade receivables. We go go to our credit losses and subtract trade receivables for 120. And then the amount that we get after subtracting, we are going to multiply it by the percentage, that is the 5%. For the 2,700 minus 120 multiplied by 5%, it gave us 2,129. Now, how do we adjust? If we don't have the opening balances for allowances or credit losses, it means we have 0. Now from 0, we adjust to 2,129 that is calculated. The difference will be how much? The difference will be 21,000, it will be 2,129. Therefore, it's an increase from 0 to 2,129. So if it's an increase, it is an expense. But let us say, for argument's sake, the opening balance was 3,129. Meaning, to adjust from 3,000 to 2,129, the difference was going to be 1,000. Now, because now it's a decrease from the opening to the closing, then it becomes an income. Understood? Because it is an increase, the difference should be an income. I repeat, if we adjust from 0 to 2,129 that we calculated, it's an expense because it will be an increase from 0 to 2,129. But for example, if opening balance was 3,129, we're going to decrease to 2,129, and the difference is the adjustment. Therefore, it will be an income. I hope that is clear. So now we have it as an increase, an expense, 2,129. Let's continue. And then the next transaction, that is transaction number 10, we must provide for outstanding interest on loan. Now, the interest on loan, guys, is our financial cost. The interest on loan is our financial cost. We must go to our answer sheet and type in interest on loan under the finance cost. Now, what are they saying about the interest on loan? The opening balance for the interest on loan, the opening balance for interest on loan on the pre-adjustment would be 12,000. That is what we have paid already for interest. So you must type it, 12,000. Now, when the statement continues, it says you must provide for outstanding interest. Therefore, it means it will be a plus. Now, we must know that the rate on the loan from Time Bank was increased by 2% on the 1st of January, right? Let us go to our answer sheet and analyze this. The amount for loan is 95,000. The amount for loan is 95,000. Now, the interest rate is 16%. And then, when was it increased? It was increased on the 1st of January, meaning from July till December. From July till December, the interest remains 16%, and that is for 6 months. And then the same 95,000 should be multiplied now by 18%. Why 18%? 18% because it was increased on the 1st of January by 2%. 16 plus 2, it's 18. And then it will be from the 1st of January until June, the end of financial period, meaning it's still 6 months. Now, how much is it gonna be? Let us first start by saying 95,000 multiplied by 16% multiplied by 6 divided by 12. Now it is 7,000. It is 7,600. And then let us do 95,000 multiplied by now 18% multiplied by 6 divided by 12. It will be 855. Now 855 plus 7.6 gives us 16,000. Let me check. Now this 16,155 will be our annual amount. It will be our annual amount. Let me show you where it comes from again. We said 7,600 plus 8,550. It gives us this amount, 16,150. Now, how much is outstanding? We are going to say now 16,150, which is annual, and then you subtract the 12,000, that is the opening balance. It will give you the difference of 4,150. And this 4,150 will be our outstanding amount. Those that are in red are our outstanding and our prepaid. Let me repeat. We are given 95,000 as our loan, 16% as our interest, and now we are told that the interest increased on January, meaning from July till December it's 16%, from January till June it's 18%, 16 plus 2. Now 7.6 plus 8,550 gives us the annual amount of 16,150. And then from 16,150 we subtract 12,000, it gives us 4,150, which is our receivable amount, or our accrued, or our outstanding amount. You get that? Right. And then I think that is the last transaction or adjustment. Now, if that is the last adjustment, we now have to check which amounts are outstanding that we did not include there. Let's check on our incomes. On our incomes, we did not insert credit losses recovered. How much is credit losses recovered from the question paper? Check it. Credit losses from the question paper. The credit losses recovered. There it is, 1,880. 1,880. We did not include this 1,880. Let us include it. There is no transaction that affected that 1,880. And then under the expenses, we did not include stationery. That is the only amount that we did not include, stationery. How much is the stationery? There is your stationery. There is your stationery for 4,500. You write it as it is. Stationery 4,500. Then everything is there. Now, students, everything is plotted. Now we need to calculate, we need to add these two incomes. It's 28, it is 25,880. And then we must add these two incomes. They will give us the gross income for the year. We will get the gross income for the year. Now for the gross income, you add 24,000. You add it with you add 242,554. You add with 25,880. It will give you the gross income. And then you must add again all the expenses. Must add again all the expenses. From carriage on revenue until allowances for good loss adjustment, it's 181,619. Then when you are done, you must have again our finance cost. It's 16,150. And guys, remember, finance cost and total expenses, they should be subtracted. So you put brackets for those. And then we will have our net profit or our net loss. Let us check. Net profit or loss for the year How do we get that? Equals to gross income for the year, minus distribution, administration, and other expenses, then minus again minus finance costs. It gives us 70,665. That is a profit. And then we need to check, do we have other comprehensive incomes? Where is my mouse now? Apologies for this delay. Then other comprehensive income for the year we don't have, and then we will now have total comprehensive income or loss if we have it for the year, which will be 70,665, and that will be the end of our statement for profit or loss and other comprehensive incomes. Now guys, please, very important, you must take note that we have this accrued expense or receivable or payable expense. We have this prepaid expense, and then we also have salaries. It's a receivable, it is a payable expense, and then we have an income, it's a receivable income. So we are going to need those as we continue. And guys, this is basically the end of our statement. I wanted it to appear, but it doesn't. Now guys, thank you for being a great audience for part one. We will move again now to part two. Thank you for being a great audience. Please don't forget to subscribe by clicking the subscribe button, and also click the notification bell so that you will be notified on future uploads. And also like the button, click the like button if you love this, and then also write your comment. You can even tell us how you feel about this lesson. If you want us to improve, indicate where we can improve. And if we are doing right, just click the like button. Please subscribe, and thank you for being the great audience. Let us meet again in part two, where we will be doing statement of financial position. Have a lovely day. We are coming back